Hi there. Few interesting points to make. First off, here's a weekly chart, so we're going back quite a long way. But if we come down to these lows here, so let me just adjust this a little so it's slightly easier to use. March 09, we actually saw the low, and from that low, we've just zoomed all the way up here in a nice, strong trend that really can't be argued with. A couple of things that we can see. We can see we started off sort of on that sort of trajectory, and we've moved on to that trajectory, but overall, up! We're going up, and there's not much doubt about that. However, not everything lasts for eternity, and if we move into a shorter time frame, we may well be able to see some other things which are as obvious as the filling of this big V here and what that might mean for the stock. Let's go into a trading day chart. Now I've already given away it's a stock. I might as well tell you what it is. It's Standard Chartered Bank. And just looking at what we've got on the screen here, it's pretty clear to see that you just put channels on here without even pausing for breath. It's just obvious. Just draw them very roughly, but it's just completely obvious that this thing's been trending along very nicely. Further to that, we see higher highs and higher lows. Just in case anyone needs them marked out. There they are. Now, this one in here, this whole area here, it's not really a swing high because it doesn't, this point here doesn't take out this point up here. You could take this one and the higher low, but there's also an interesting thing to note here. These higher highs, okay, we're making it to higher highs, but it's a bit of a grind at the moment, isn't it? That's what one would expect at new highs, and when there is a general level of resistance across here that comes from the other side of the V before we dropped off a cliff in 08. But the trend is up. However you want to draw it, the trend's up. So, do we want to put a trade on yet? No. What we want to look at is here, and this very interesting gap that we've just had here. Couple of points to note. Here, the 19th, I think that Standard Chartered went ex-rights on the 19th. A rights issue. This rights issue has been deeply discounted, and so what one can logically expect is as soon as a stock goes ex-rights, then there will be people that just sell immediately, knowing that they're locking in a profit with their and they'll run a short through to when they get awarded their shares in the rights issue. Coupled to that, we had this gap here. This was on the back of the British Chancellor of the Exchequer announcing some levy on the banks, and apparently, according to one analyst, I think at BNP Paribas, HSBC and Standard Chartered are going to carry slightly more of the can than the other banks. Well, okay, all this means to me is that they've talked some people into selling, and at the moment here we have short-term support, hasn't broken anything. What will be interesting to see is this gap here. See what happens to this whole area here. The longer this stays as a gap, the stronger it becomes. At the moment, you can expect sellers to be here at the top of the gap. That's where they started selling. You can expect to see something at this level, and we just don't know what yet. And by gauging market action, we'll be able to tell a lot about price and the strength of this stock. If we completely fill this gap, then basically we can say that these sellers have gone. But if we get back up to this level and it starts getting hit hard, you know that they've got more to do. If they can't even make it back into the gap, then other people are thinking, oh, we want to join in here and do some selling too. And these sellers that were ready up here and started selling here are just ready to pound it at this same level. They just want to get a shot of it. Difficult to say. This could just be a block of stock all gone in a oneer at the same time, and give it a couple of days and things right themselves. Given that this support down here hasn't been taken out, this short-term support, and that we're in an uptrend, etc, 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 this is not a time for selling. Even if it goes lower, it doesn't matter. You're risking too much. You're selling at the bottom of a zone, and that's never a good idea. We want to wait until we see a little more action of what bits and pieces could mean. So at the moment we just don't know. What we do know is that we could be on alert. We've got X rights, so there are some sellers up here. Of course, they're just, they're delighted. They know what price they're buying at in the rights issue, and they'll chop some out at 1960. Of course they will. No problem. We can also start measuring this swing to date. If we started going back up, we can see how far we can get into the gap. This 38.2 line is roughly halfway through the gap. Halfway through the gap's a meaningful point. If you can only make a 38.2 retracement and then head lower, that's suggesting that there's a fair bit of weakness. This 50% retracement of this whole gap, 1895, of this whole swing to date, sorry, that's 1895, that's basically filling the gap. Okay, and then these are pretty meaningless in what we're looking at here. We're really analysing this gap, and we're going to see what happens over the next few days. So there is no trade right now, but absolutely certainly this situation needs to be monitored, and we can get a really good feel of whether there's a whole wave of sellers coming into the market here, or if it's just a short-term move. Some sellers are bumped out, they've got a few buyers will step in here and take up the slack. So let's put this one on alert for the time being. Why don't we?